In this video, we look at superannuation pensions in Voyant. First, we'll set up an accumulation phase pension, then a retirement phase pension, and then we'll set up a transfer to move money from one to the other at the retirement event. I'll talk you through the tax treatment, where we display the tax, and also where we display withdrawals and contributions out of and into the pension. Firstly, let's ensure there's a salary in the plan, which is this plan for Julia Newton, which is partially complete. I'm in the dashboard view and I expand using this downward arrow. I can see I have entered earnings for Julia of $80,000 a year. So now I'm going to add the accumulation phase pension and I'll talk you through some of the different fields. To enter the pension into the plan, start in dashboard, go to the plus button bottom right, pensions, superannuation. I'm going to call it Julia's accumulation pension. And these balances here are for money already in the pension. So the concessional balance, that's the taxable component tax element. The non-concessional balance is for the tax-free component, and the other balance for the public sector pension. The cost basis is what you bought it for, and here employer-linked plan is whether or not it's linked to employment. You need to select yes here in order to have the guaranteed employer contributions set up by Voyant automatically, and also to then see the salary sacrifice option. So once I link it to the employment here, you can see now the salary sacrifice contribution option up here. First though, I'm going to put in a concessional balance of $100,000 with a cost basis of $90,000. Yes, it's an employer-linked plan. This is the employment it's linked to for Julia. And it's got a salary sacrifice as well from Julia of $10,000 a year. We now need to enter a timing for this. You'll see a prompt here to update the timing using this link, or you can go to the top left and click on timing. Timing is needed to tell Voyant when these contributions occur. So I'm going to click on the start event and say set a start event for when the contributions start. In other words, something that she's doing now, and they're going to end at her retirement event. Let's go now to the growth screen. This is the growth on the pension, and you can either grow this account by enter growth rate or portfolio and holdings. If you select portfolio and holdings, you can then go to the portfolio tab and specify the percentage of each asset class. This will give you the expected average return, and you can see in your plan settings what the average returns and standard deviations are for each of the asset classes. In this case, we're going to use enter growth rate and leave the growth rate at the 6%, which is the default. The default is taken from your plan settings on the investment growth rate section. So you can change that for every new account that you enter in the plan settings. Of this 6% growth rate, there's 10% gains realised annually. And of these gains realised annually, 10% of those are short term. You also have the option of adding dividends and interest. I'm going to click done now to save this pension entry. And we can have a look in year view to see the details for the pension. I go to the pensions tab, and I can see this Julia's accumulation pension, which I've entered, the end of year balance in this year, the net growth, so the gross growth was 6, and if I click on the pension to see more information, the fees from my plan settings have been applied of 0.5, so the net growth is 5.5. Here are the contributions and here are the withdrawals. Scroll through each year using this scroll bar under the chart, and see details of the contributions into the pension here. Here's the salary sacrifice amount that we put in and the amount actually going in after tax. In unscheduled, you'll see the employer contributions into the super, and these are based on the salary for Julia in that year Voyant. So go to the cash flow and you'll see the assumed salary in that year. If you have a growth rate on this, then it will change. Let's now look at the tax. So this is of the gains realised annually. If I go to the taxes tab and go to the superannuation section, you can see the short-term earnings tax and long-term earnings tax here of the $58. If I go back to the pension, you see the $58 is being withdrawn from the super itself in order to pay this tax. You'll see this as an expense in the expenses tab, and also in the cash flow to show the money being taken out the super in order to pay that. Let's go back to the dashboard now and create our retirement phase pension and the transfer between the two. So plus button, bottom right, pensions, superannuation, and this time it's retirement phase. And click done. Once you've checked the growth rate is suitable for that pension. And then we're going to set up the transfer to move money from the accumulation into the retirement phase. So plus button again, transfers. We're going from Julia's accumulation pension into the retirement pension, and we're transferring all available. I'm going to do this at Julia's retirement event, so this transfer will happen then. Set a start event. I'll click done. You can see the minimum required withdrawals coming out of the pension. In this case, in these years between 65 and 71, these withdrawals aren't sufficient to meet their needs, so they will need to access taxable savings in order to make up the rest. You can use your liquidation order in your plan settings in order to change what's accessed first and second. So what have we done? We set up an accumulation phase pension using the plus button, and we set up some contributions into that. Then we set up a retirement phase pension, and then a transfer between the two at Julia's retirement. We also had a look in year view to see the details of the pension tab, the end of year balances, and the net growth, as well as contributions into the super and some of the tax. If I go to year view and scroll along to this retirement event, pensions tab, you can see money being withdrawn from the accumulation phase and contributed into the retirement pension. See the transfer balance cap details by clicking on the pension's name. Thanks for listening.